Okay, good morning, everyone. It's 8:16 Chicago time, 9:16 Eastern on Thursday, the 19th of October, 2016. Had some serious issues with the broadcast software. It just will not start. Had to do a full reboot. Took a while. Here we are, 16 minutes late. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is allocation is definitely going into safety this morning as the market gaps down. The S&P 500 right now is down about 10 points, trading at 25.50 and a quarter. And overall, the driver, as far as I can tell, the driver this morning is the news out of Spain, some potential instability there um, as a result of the Catalonia independence standoff that's occurring. That's likely to destabilize the European Union somewhat. So we'll see how that goes. But overall, the numbers that came out this morning are fairly good. Philadelphia Fed came out at 8:30 Eastern, 27.9 versus 22. Initial claims came in better at 222,000 versus 240,000 expected. Initial continuing claims came in better as well. These are for continuing claims. The numbers this morning, 1.888 million versus 1.89 million, are the best we've seen in the United States since 1973. So everything is looking a-okay. We got a lot of earnings as well, but let's not spend a lot of time on that. You can look that up yourself. Uh, there's just a lot going on right now that is likely to give us some um, pretty good opportunities into going into today. Also, Alcoa reported 72 cents versus 77, completely missing both on the earnings per share and revenue. And there's other news out of various other parts of the world that are likely to help push things around. This is good news for us as day traders. We like volatility. I'm expecting the VIX to pop up a little bit today. So let's get into real quick what was expected yesterday. Because the system went down, I lost a spot where I set up what was expected. So I have to kind of seek it out. But yesterday the expectation was for responsive selling back into 50% of the range. In either case, I expected a gap to remain open and for the market to turn up, and I was looking for the push up. So I'm waiting the primary scenario, this scenario one of the playbook yesterday was for the market to become responsive early on, and then for it to consolidate, give us an indication of support, and then to get long and look for that push up, which is basically what happened. I expected it to move down to at least 50%. It ended up moving all the way down. Here's what it looked like yesterday. This is the overnight, and we're looking for the day. All right, I guess I need to open it. 1 second. Here it's right there. So this is what the ES looked like yesterday. Responsive selling on the open. Responsive selling on the open pushed right into the prior day's high. Did not get to the point of control. And poked in, and then immediately found its buyers. And then we had sellers on the close. So overall, Hypo 1 was in play where the market maintains these higher prices. We moved the point of control up. We moved prices up. So we're higher highs, higher lows in price action and in value. The secondary hypothesis was for consolidation, a tight consolidation with a push up. The third scenario, I should say, The third scenario is responsive, creating better opportunities, pushing into the point of control into the range. Actually, scenario 3 is really what worked out because we did push into the range, couldn't quite get into the point of control. Then I went over the Russell scenarios, and here's what we had. Russell, that's the primary scenario right there. Open, push into 1508.80, and then become responsive down towards the lower end of the range and hold sideways. Here's what actually happened on the Russell. It pushed through to 1510.30. I expected it to take a pause up here at the prior day's high. It pushed through by 2 points or a point and a half, and then it sold off later on. It does not look like what was expected, really. Secondary hypothesis is for the market to just get responsive early in and push up towards the 1513 area. Didn't see that either. So that's where we are. Here's the overnight right there. Here's what happened overnight. Okay. As far as expectations go for today, I forgot to cover 10 a.m. today. We get leading index for September, expecting 0.1. And overall, the market just sat sideways, traded just like it normally does through the Asian session, and then just took a dive with the biggest part of it. The news started coming out at about 1:30 a.m. Chicago time or so. By about 2:20 in the morning Chicago time, we started to get official news. Catalonia leader clarifies stance on independent suspension of referendum remains in place, and then at 3 o'clock, the Spanish government invoked Article 155, removing Catalonia's autonomy within Spain, and that triggered off this sell-off. This is basically a standoff, and of course, potential for serious problems. On the overnight, we get a nice impulse, and we pull back to the mid. This is a classic setup for me, statistical setup. Pulls back to the mid, which has VWAP in it as well, and then you get the continuation trade. Normally, we would expect, although this is on news, doesn't have the same statistics, we'd expect the low 25.42.50 to be retested, and what we have here is impulse pullback, higher low, and potentially corrective. The overall outlook for this morning on the ES. Let's pull up that chart again. I'm out of time. So I'm hurrying through here. The overall outlook for the ES this morning. Excuse my throat's still rough from yesterday. Overall, looking for an open auction that gets responsive, and I'm looking for this to rejoin the last auction. Remember, this is on news. So scenario 1 is responsive, is completely responsive. Let's not forget that overall, when we look at the profile, we simply, on the overnight, we simply pushed to the MC point of control. Let's squish that a little bit and look at the big picture. Here's where we are. Okay. So the overnight was below it. We're trading above the point of the MC point of control is what I meant to say. The overnight got to value low of the MC point of control, and has traded down to the other side and is now at the point of control. So I expect a little bit of tanglement here, but the overall expectation is for impulse up, for the market to be responsive. Again, that's scenario 1 in our playbook for the day. The other opportunity that we may have is for responsive to fail. However, failure needs to come in the form of a market that breaks below the opening swing and then gives us an impulse. We need to see an impulse to the downside, and in that situation, we would be playing against the opening swing low and against the MC point of control, looking for a break of the overnight low, right? The overnight high is way over here, so we'll be playing on that 97% statistic on the overnight stat, and we would look to the low side, and the primary target becomes 25.4250. I expect that we would see a higher low and a market that starts to move back up towards the point of control and finishing at the point of control on scenario number 2 of our playbook. I will leave you with that. There are 2.5 minutes left to the open. I ran out of time here, but to get into the Russell. But that's how things are shaping up. So the first thing I'm going to look for on the open, and these are great opportunity days. These are great opportunity days because we do have uncertainty coming into the market. However, this uncertainty is coming in the form of news, and so we have to be aware of the scene of the crime, return to the scene of the crime, and a strong potential for a push back up on a market that is driven by buying of the dip every time. So as we look to scenario 2 on the short side, I'm very tentative. I don't go full size in on sell side trades. I will be looking to the long side under hypo 1 as discussed. Anyway, that's your trader bite. That's as good as it gets. Had to battle my way back from these technical issues, but we have a plan together for today. It's our chance now to have the market look at give us an idea of what it wants to do so we can jump on trades just like you saw in webinar 5 on my website, just stalking trades, taking them and managing them. Good luck. I'll catch you tomorrow. It'll be better. Take care.